Okay, well, welcome everyone. Welcome to FBN's Q&A with everything you wanted to know about farm financing, whether on inputs, land, operating lines, here with our FBN experts. And so here with us today is Dan English, General Manager of FBN Finance. And we're gonna go through a whole range of questions that came in over social media and that commonly farmers have about how to finance the farm. So welcome, Dan. And yeah, to get started, Dan, tell us, about your role at FBN and how you work with farmers and how you work with members across the U.S. and Canada now.
Yeah, well, I'm the general manager of our finance business, so that means I work on all of our lending offerings that we have here at FBN. We have land financing and refinancing, operating loans, equipment financing, and then of course our input financing as well. And so we do everything from helping out on the sales side, getting the applications in, reviewing those applications, and all the way through funding and monitoring as well. So we help you kind of soup to nuts here on the financing process to make sure that it works for you.
Great. Well, okay, so we're going to go through a range of different discussions about farm lending and financing, how producers should use it, how they should think about it, the different options that are available to them, and things they can do to be more effective when they go out to get a loan or financing. So I think firstly, why use financing, and what are the different ways producers should think about their financial goals and the types of financing products and tools that can help them in their certain situations?
Yeah, well, this is really a tool for our farmer members, and they should use this like any other tools. Useful in some spots, it's not as useful in others. If you're a farm that has been able to pay down a lot of your debt, maybe that's where you want to stay, then maybe financing isn't the right option for you. But if you're looking to grow, if you're looking to boost your return on equity, or you frankly need the money to be able to get through, then financing is really a great option. So a lot of farmers are lucky to have inherited some land or maybe some equipment from their folks. Other folks maybe haven't been in that lucky of a position, or maybe they need to grow beyond the size and scale that their parents were at. And that's where financing can really come in to help you grow quicker and use someone else's money to get the job done.
Right. So we're sitting here right at the end of harvest time. A lot of producers are not focused on ag lending or getting their financing operating line or input lines right now. There's a lot of other field work that's going on, but that seems quickly sort of coming up. And the last thing we want is for producers to be in a position in March or April, without access to that credit when it really counts and they need to get in the field. So talk about some of the more common mistakes or issues you run into with producers when they're coming to FBN applying for financing, and the common misconceptions, and what producers can do early to make sure they've got the best possible experience and position going into the winter season when they need to get credit approved.
Yeah, so I think there's a couple things that you really want to be prepared with whenever you come for financing. The first thing is making sure that you have a plan for the upcoming year, and you really know how much financing you're going to need and where it's going to fit in. And those numbers can change as you go through and what you're going to plant, when you're going to plant, where you're purchasing from. But you should at least start out with a good idea of what exactly it is you're going to need and where you're going to get it. The second thing then is really understanding, how much money that is that you're going to need from each of these individual partners. So what are you going to put on your operating line? What are you going to put on your input financing? What are you going to pay cash for? Are you going to be selling grain or livestock throughout the year to help finance some of this? And really understanding that. And then finally, making sure that you have as much of information about your financial picture available as possible. So this year tax deadlines were pushed back, and some people got extensions. So if you haven't filed your 2019 taxes yet, making sure that gets done as soon as possible. Getting as much of those year-end balance sheets and year-end financial picture, kind of getting that ready as soon as possible. And really just understanding, is your credit position any better or worse than it was last year? Does it look about the same? And having that information ready to go. So, if if you had a tough year this year, being able to put that in context and explain that to your banker. If you had a great year, understanding what opportunities that creates. Once you get those financials in place is really when you can start to understand some of that and really act off that and use it as a springboard to get your finances in order for the coming year.
Okay, so one of the other big things that goes on this time of year is the start of input buying season, where producers either looking to take advantage of tax deadlines in terms of end of year or early discounts to become available. This is a big time of the year when producers buy things like seed, chemical, and fertilizer. And at FBN, this is a time of year when we have Cyber November and really big early discounts available for farmers in our 0% financing program. Talk about the differences in input financing versus operating lines and how farmers should think about using those different sources of capital for managing the farm, especially the different costs of that source of capital when it comes to how to carry a major purchase like an input throughout the year.
Yeah, so it really goes back to again having the plan and understanding how much financing you need, and to the extent that you can put it on a 0% financing program like we have it in FBN for input financing, that's typically going to be your cheapest source of capital. You'll obviously want to weigh that against whatever the cash discount is that FBN or others may be offering and understand what that trade-off is. But the rule of thumb that we like to use is for any say $10,000 purchase that you're making today, if you're able to put that on 0% financing, that probably saves you somewhere between $500 and $750 by the time you pay it off. So those are real savings and something that you can put right towards your bottom line. The advantage of going with an operating line, which most people would probably have both, is flexibility, and you can use that from different input providers. You'll be able to use that for your rent and other expenses there, whereas input financing will typically be tied to a limited number of retailers or one retailer. And so, you'll probably want both of those tools in your toolkit, but it's really about lowering your average overall interest cost and expense. And if you're able to put it on 0%, that's a great way to do that. The other big advantage of putting it on input financing, as opposed to the operating line, is typically the underwriting standards aren't nearly as strict for that because for a variety of reasons, but the biggest of which is, they're also selling the product as opposed to just making money on the financing. And so because of that, you can probably get approved for more, and it can be an additional source of financing beyond your operating line. And so if you're able to get input financing in place, that really gives you flexibility throughout the rest of the year to use your operating line to cover unexpected expenses or other expenses that maybe wouldn't fit or you can't buy directly from a retailer.
And so this year also has been a historic year in terms of the Fed lowering rates, those rates being available for things like land financing and then refinancing. We've seen a huge surge of farmers looking to refinance, especially refinance land loans that they have out there, where they pass on much lower rates into the market. Tell us about what's been going on and the types of savings and experiences that you've seeing farmers as they've gone to refinance their land, and what options are out there for farmers, because this is really a historic moment and opportunity to lock in savings for decades.
Yeah, it really is. And the way this all started was after COVID really took off in the U.S. in the March timeframe, and the kind of full economic impact of that started to be seen. The Fed dramatically lowered interest rates. And they put in place a number of programs to start buying treasuries and other agency bonds and things like that, which had the effect of lowering interest rates for not just the federal government's borrowing, but for a lot of the private sector as well. Because of that, we saw rates, just in a matter of a month or two go down, a very significant amount. And if you look compared to 18 months ago, rates are off, a percentage half or 1.5 or more for some products. What that means is for your typical farmer, they're going to be saving a very significant amount of money if they can refinance their land. And obviously, they need to have a solid credit score and be in a steady financial position. But if they can check those boxes, this is really a historic opportunity to lower their rates and get lifetime of savings. For some people that we refinance, on average, we've been able to lower people's interest rates by about 1.6 percentage points. So say if before they're at 5% or something like that, they'd be at about 3.4% now. That translates into real savings. For one of the farmers that we refinanced here just at the end of September, he was able to lower his annual payments by more than $150,000. And he was able to do that by lowering the rate and extending the length of those payments. His comment was he'd be able to do double payments, so pay it off in 15 years instead of 30, and actually be saving almost $10,000 a month still, which is really amazing when you think about it, in terms of the financial impact and really a life-changing amount of money that he'll see in his pocket, every year now.
And that's all straight to the bottom line, right? So that's right. So you think about, again, you have to think about these bottom line savings in terms of the amount of production, amount of acres it would take to put into production to drop that equivalent amount to your bottom line, whether that's on financing or that's on healthcare or that's on an input savings. That's one of the most helpful ways to think about it in terms of how many acres would I have to produce to generate the same amount of cash, back into my business.
Right. And, probably, this is, very rough estimate, but it would probably be about $15 per acre in savings is about what he had per year. And that's a phenomenal amount of money.
Right. So one of the shocking things actually that, when this started back in March and we were starting to have those conversations with producers about refinancing was actually how often their current banks they're coming to them with those lower rates, or we're not making it easy to access lower rates in the market. Talk about our sources of capital and how they're the same in many cases as other ag lenders out there, and really just the difference between making those available. Many people just simply were not wanting farmers to access much lower rates, either their business models couldn't support it. But that was really stunning to me, was that here you had this opportunity for farmers to get into a much better financial position, to lock in their savings for decades, and that was they were having to seek that out.
Yeah, and it's very unfortunate that was the case, but it is something that we've heard time and again from our growers, is that these rates have not been pushed to them by their banks. They've had to go out and fight to get those rates, or they need multiple competitive offers to even get their bank to budge at all. Really too bad. And that's like everything we do here at FBN. We obviously want to sell you the product, but if we can at least use us as a bargaining chip with your local lender or whoever else. Now, the reasons for this are, a little bit complicated, but at the core of it is if they have a loan that they're making 5 or 6% on, they don't want to turn around and lower it down to 2.5 or 3 or 4%.
Right.
And, that's money that comes out of their bottom line. And so, as a new lender, we are not having any farmers that we're writing down what their loans on. We're starting anew and giving people the best rates, and that's very much in line with our philosophy. The other thing is, frankly, there's been a decline in the number of local ag banks across the country over the past number of decades, and it's really accelerated since the financial crisis, in 2008, 2009. And what that means is that there's less competition. A lot of times borrowers don't have the same relationship with their lenders that they used to, and there's just fewer alternatives than there ever were before. And so they don't have to work quite as hard. And so, we're hoping to inject some, new life into that market, make people fight a little bit harder to, lower those rates.
Yeah, there have just been, less competition over time. We've seen this in the retail world, we've seen it in the inputs world as well. But, more consolidation in the industry has led to reduced competition, has led to reduced prices. And in this case, something where every single farm who owns land needs to be having a refinancing discussion this year. No matter who your lender is, no matter if it's FBN or somebody else, you need to be going to your bank and see what can be done, because this is the easiest way to free up cash flow and free up working capital for your business for decades. Benefits your children or whoever take over the farm.
Yeah. The one other thing I'd say about that, Charles, is when you talk to your banker, make sure you're getting an apples to apples rates. a lot of banks are unable to do 30-year fixed rate terms. And so they may be able to match us on rate and say, 3.6%, but the rate may only be locked for 5 or 10 years, at which point you may have a balloon payment or the rate may reset and you will be paying it at whatever the rate is at that point. Whereas, for similar thing, if we're looking at a 5 to 10 year, just having it fixed for 5 to 10 years and then say paying it off over 30 years, our rates for those types of products are below 3% and may even be as low as 2.5%. And you really want to make sure you're comparing not just the headline rate, but all of the terms as well.
I know in my own situation, my home mortgage, my bank has not been knocking at my door to get me to refinance as quickly as I can, even though there's some really incredible savings out there on that side as well. So yeah, there's trade-offs in structures, fees, and rates. Can you talk a little bit about that in terms of the different things that farmers really need to pay attention to when they go out to refinance or look at operating lines and input lines?
Yeah, so what you really need to think about is what you're going to be doing in the future years, and what your goal with this debt is. Let's say you feel like your operation is at a sustainable size. You're not really looking to grow. You want to be putting more and more money to your bottom line every year, and you want to be paying it off over time not overburdening yourself in these early years. And something like a 30-year fixed is a great product. It locks you in. It really removes a lot of the interest. It removes all of the interest rate risk that you have down the road and stretches out the payments as long as possible. And so you're paying less each year. If you're really thinking about growing your operation and are going to be wanting to use that land as collateral again, or you're going to be needing to take money out to boost your working capital 5, 10 years down the road, then we'd certainly encourage folks to again consider a longer term for the loan, but have a rate that maybe resets 5 or 10 years down the road. The advantage of that is not because you necessarily want the rate to reset, but you're paying a premium for that 30-year fixed relative to just fixing it for 10 years. And so if you're not going to be able to take advantage of having that rate locked, from 2030 to 2050, then you should pay the extra amount of money. And then, finally, some folks are really just looking to pay down their debt as soon as possible. They have a lot of financial flexibility. Maybe they've used it as a buffer to acquire some land in the recent past or something like that. And they're, looking at something that's a shorter term, amortization, say a 10-year fix or a 7-year fix with a 15-year term, something like that, can really be a good option to get the absolute lowest interest cost and pay off the note pretty aggressively.
So Dan, one of the questions we got a lot on social media was just the differences between U.S. and Canadian options. We have FBN as members across U.S., Canada, Australia. Can you talk a bit about what's available for our Canadian members, versus what's available for our U.S. members, and Australia is all still coming soon.
Yeah, absolutely. So our biggest, our main offering in Canada today is our input financing. So we have 0% input financing there. We do that through FCC, which probably a lot of you are familiar with. Obviously, very reputable and strong lender up there in Canada. And that's the main offering. We don't have operating or land financing yet in Canada, although we hope to, sometime in the near future.
Great. Well, so this is, really been a new thing for FBN over the past about 18 months here. Talk about how it's been going, the team, we've put together. I think one of the great things about the team that we've built is, folks know FBN is online and over the phone, and we are, but this team is really experienced, decades of experience in ag lending, on the livestock side, the cropping side, and regionally spread across the United States as well.
Yeah, well, one thing that we found out when we were, in the early stages of building this business was the importance of that relationship between the farmer and the banker, and having someone who really could understand their operation, someone who understood the financials, what the options were available to them, and really could act, almost as an advisor to them in many capacities. And farms differ on how much they need that or how much they rely on that, but just knowing that that's an option is important to a lot of farmers. And so, when we went out to build the team, we really over-indexed on making sure that we had people with great experience and who came from good, reputable lenders who would really understand agriculture. And so, we hired people from Farmer Mac, the Farm Credit System, very strong community and regional national banks. And we've built an excellent team here in order to help folks work through their loans and their financing options with FBN. And so, whenever, if you work with us, you'll work with a loan advisor who's the person day-to-day working with you, and then a credit analyst as well, who has a similar type of experience, but is more detailed on the numbers, and we'll be digging through tax returns and things like that.
So this time of year, we've got harvest just ending, but Cyber November is about to start, and then we'll go into the heaviest period with folks getting operating lines. So make sure you're getting your materials together and ready. The FBN app for 0% and input financing takes just a few minutes to complete, and the turnaround time is pretty quick from FBN. The link, we'll post a link down here below the video to all the FBN Finance offerings. So please make sure you check those out. Don't miss the opportunity to both get the low interest on the financing input line and the early Cyber November deals, because that's how we can help you lock in the best prices throughout the year. And that's really one of the greatest savings opportunities on inputs that pop up throughout the whole year. And then, on the operating lines and land financing, start that discussion. Get in the conversation with Dan and his team. We have really great folks who can be very helpful. Talk to your current bankers, talk to your existing lenders, make sure that you're getting competition, make sure that you're getting offered what the market can truly bear, because that's the role of FBN, is providing transparency, providing competition, and helping all of our members succeed, whether it's with your current suppliers or with FBN as a provider of financial services. And we're increasing the number of offerings. We have equipment financing, land, input, even margin lines on trading. So there's a range of different things you can do. And so make sure you start those conversations early, and so you go into next year as well situated as possible. So thank you very much, Dan, and we'll be back soon with more FBN Q&As.
Thanks, Charles.